as you've all heard, obviously a lot of changes happening in all throughout Washington. But I have stressed over and over and over and over again that we've got to maintain our focus on building something that we think is going to last. And the only way to do that is to do it in a bipartisan way, in a pragmatic way. And so I am very, very excited. You know, when Congresswoman Pedersen got elected, and you'll excuse me for a minute because we still get to work with Ed Perlmutter when we go out to Colorado, and we're excited to. But there was a lot of people who said there were big shoes to fill, big heels to fill. I don't know if he wore heels. But I will say that you have done sort of everything that we would have expected as someone coming in to really sort of step into financial services, make a tremendous difference, and really take us down a path of pragmatic solutions to solve for some of the problems we've talked about today. So, Congresswoman, thank you so much for being here, and please come on up.
Phil took all of my accolades for the Congresswoman, but I will mention a few other ones. She's a member of the House Financial Services Committee, really a champion of consumer protection, housing affordability and accessibility, and really a big proponent of Fintech, which is one of the reasons I think that this is going to be a very exciting panel. I think, although probably the best, is the first woman, if I'm not mistaken, to serve in the 7th Congressional District of Colorado, right?
Yes.
All right, that deserves an applause. Great. So anyway, anything else you want to say to introduce yourself? I mean, we got a lot of accolades, but I'm sure that...
Well, hi, everybody. My name is Brittany Pedersen. I represent Colorado's 7th Congressional District, as you heard. Do I have anyone here from Colorado? All right, we have one. But it's still great to be with you. I was in the state legislature for 10 years before I ran for Congress, and I think that really prepared me to hit the ground running and understand how critical it is that we work together to try to solve problems, work in a bipartisan way. The reason why I asked to be on the Financial Services Committee is because of the housing crisis in Colorado. I wanted to be on the housing subcommittee, but I've found value in all of the issues. Ed Perlmutter said that he thought I'd be bored on financial services, but it's actually very interesting and meaningful with the work that we do. And so I'm excited to be here to talk about what to expect in the next Congress, even though I'm in the minority, so I don't have as much insight as I would like.
Great. So, well, what's been going on, right? In the last few days, I think if I've heard the word new administration in this summit, it's kind of, if it were a drinking game, we'd all be in trouble. There's been almost in every panel, we've talked about the results of the 2024 election. So really, first question for you, Brittany. What are your thoughts on what happened a couple of weeks ago by now?
Well, obviously disappointed. I thought that we would be in the majority in the House at least, but we're going to be in a slim minority again, and so it's really going to to be even more important that we're trying to find bipartisan solutions. It's going to be hard to get things through the House. Continue to be hard, and so I'm hopeful that we will still have a voice and a place, we'll have a seat at the table. I've really appreciated the Financial Services Committee, though, because it is run in a much more bipartisan way. Even though, coming from the state legislature, it is an adjustment when how many people have had to listen to our committee hearings? I'm not used to all the attacks in the legislature. We all work together. We treat each other respectfully. People that are testifying, no matter what their views are, you don't hammer them. So I'm still adjusting to Congress in many ways. But the Financial Services Committee is something where we do work together, find common ground. I have a lot of relationships across the aisle, a lot of bills that we're pushing forward. So I'm hopeful that will continue. I think that what worries me the most right now is watching the appointments, and when I think about the financial sector, how critical it is that we have competent, experienced people at the helm to make sure that our economy is on track, that we're adjusting as necessary with threats that we're facing with our very important agencies. And so as the appointments continue, that is what worries me right now in making sure that we have people that are able to do these incredibly important jobs. And so far, I have not been impressed. So I would say that is, we need predictability and stability for our economy to work. And so while I know some people are hopeful about less regulations. When you all think about the previous administration, we remember a lot of the chaos and turmoil that came with that and the ramifications. And so that is what worries me with our economy.
You mentioned just right there regulation. I mean, our name of our panel somewhere, it's a new direction. So let's talk about a new direction in a few issues, right, or a few areas. Regulation. Right after the election, crypto went through the stratosphere. It's probably approaching Mars right now. You've got some public alternative lenders, fintech lenders, stock skyrocket as well. The Wall Street Journal speculated that this was due to an expected lighter touch on regulation or a hands-off approach to regulation. And I think many are just expecting overall a friendlier environment for bank fintech partnerships, bank mergers, perhaps de novo applications. What are your thoughts on this? I mean, do you there's a lot of expectations out there. I mean, I think every day we hear something, but what are your thoughts? Do you really believe that, are these things unfounded? Are people thinking that perhaps there's just too much expectation on lighter regulation or a friendlier approach? What are your thoughts on that?
Well, I appreciate having those rose-colored glasses, but with so much of the work that we do is actually industry coming and asking for regulation. Now, I recognize that some of the rulemaking maybe that was a little bit too unpredictable, that the timeline was much too short. I had a lot of feedback from companies on what was happening on the agency side of things and how problematic that has been. But I also, having that stability, having a governing body that has competent people is also a critical piece of this. And so I think that they're going to still be, so we need to come together, actually protect consumers in a productive way, making sure that we're not actually opening it for states to have patchwork, piecemealed approaches. You all know when we don't have federal guidance and standards, states start taking that on, which is incredibly difficult. I can tell you as a state legislator, for 10 years, we really don't fund the support at the state level that you need to take on some of these enormous issues. We also leave room when we're not leading here when we aren't leading here as a nation for some of these regulations with opening it up to others setting that standard across the globe. So I think that there's some opportunity. Whatever has passed or whatever the people who have been in charge of agencies and some of the rulemaking, I don't think that reflects Democrats as a whole. I think that a lot of these issues are bipartisan. So when it comes to things like regulating crypto, which you can expect will continue to be a focus, as you already mentioned, the digital currencies had a good night in the stock market. But it's going to be us trying to come together and actually providing that floor and regulations that work, because I know that having nothing, and as we see the pendulum always swings back, I think that I'd like to focus on not having it be a wrecking ball is all I can hope for in this country now, but that we need to actually work together so that it's going to meet that standard. You're not going to have the states kind of taking up the helm.
One of the areas I was at, many of you may have been at Money 2020 last week, right? Feels like 3 weeks ago. There were about 57 panels on AI. I don't know if you noticed that. It seemed to be the hot topic there. So I want to touch upon AI, and then we'll talk a little bit about the federal banking agencies that you touched upon. But many are predicting a more permissible environment for AI. And some are actually predicting that Trump will, overrule or revoke Biden's executive order on AI. And I know you've done a lot of work in this area, and I still are. So can you give us your thoughts on what you think AI in the next 4 years will be?
Well, I'm on the Bipartisan AI task force, and I also had the financial services focus task force as well. And so, I think that the Biden administration, what they did was incredibly helpful. I think companies want clarity on how they're supposed to be using AI and what guidelines we have. So by investing in staff, making sure that our agencies can respond, by making sure that we're addressing the workforce needs and creating that guidance. Nobody is asking for that to be repealed. So I think that it's really important we continue to move forward and we're not going backwards on AI. Once again, I think we have to lead as a nation around AI and the regulations that we're bringing. It is going to set the stage for what our economy looks like, who's going to benefit from these new technologies for the next 100 years. And if it's China leading the globe, that is a very bad thing for the United States. And so when we leave this gaping hole, we have other countries who are setting those standards instead of looking to the US. So it's actually really problematic if we're not building upon and bringing a productive regulations and investment around AI, and especially when it comes to evolving with meeting the workforce needs, making sure that our agencies are responsive, that we're providing clarity for businesses. All of these things are very good things that help our environment and our businesses succeed over time, and provides that sustainability. And so, I come from Colorado, as you know. They passed many pieces of legislation, or they passed, I guess, one that I've heard of from businesses as being problematic, but you start to see legislatures taking this up because of lack of federal action. And so can you imagine what it looks like if you're navigating in your businesses in all 50 states and different regulations around AI? That's very problematic. So I think that we should be working together to bring a standard that really ensures that does not happen.
All right, thank you. When you talk about a new direction, I think you have to really think about the leadership at the head of the agencies, right? I think almost assuredly, unless something happens, there will be leadership changes, particularly at the head of the CFPB, the FDIC, perhaps not the Fed, obviously for obvious reasons. With leadership changes, the question comes around rulemaking, right? We've seen in the last administration, very active administration in rulemaking, both with proposed rules and final rules. Some are predicting that the agencies, the rulemaking authority will significantly decrease in the next 4 years and maybe even almost extinguish. And on top of all that, you have a recent Supreme Court decision, right, on Loper and revoking the Chevron defense of agency deference for interpretive action. So all of that put together, do you anticipate rulemaking from the individual banking agencies to decrease, as many do, or are expecting it for the next 4 years?
Well, I think that when you look back at the first 4 years of the Trump administration, there was still a lot of rulemaking, maybe in a different direction. I'm sure that you'll see a lot of action. I don't think that it necessarily is going to decrease. It just might be a different focus. But I guess I worry about. I understand that it's very frustrating, because if I think about all the conversations I've had with businesses, having to adjust to who's in charge all of the time and the huge swings can make it very difficult for your businesses. And so I hope that we can kind of, good governance is trying to meet in the middle and listening to both sides and trying to provide a framework that works for our businesses to be successful, protects consumers, which you all care about doing. Your businesses have the opportunity to help the underserved, and you all get to lead and kind of step in where we aren't having maybe some of the regulations that you might have seen if Democrats were in charge. But because we know the pendulum always swings back, we want to make sure that you all continue to do your great work in protecting consumers, leading the way, so you don't have terrible stories where you have huge swings or you have overreaching legislation at the state level. So I think you're going to see still a lot of action. Chevron, the Supreme Court ruling also puts into question how much things are going to change around how much the agency is going to do and take on. I think that what worries me about that, I understand why that's appealing, because maybe there was too much done too quickly in the last 4 years, is what I heard from a lot of businesses. But when you think about how dysfunctional Congress is, how are we going to react to financial threats? How are we going to make sure that that they're able to do what they need to in our economy to make sure that we have that we can function as a government? I mean, that's kind of, some of this is a little concerning when I think about relying on Congress to tell agencies for everything that they're going to be doing based on the Chevron ruling. So I think I tried to take a balanced approach to these things. I think that that's where the good policy is, good regulation, listening to both sides. And I look forward to hearing from all of you on how we can work together and be a voice as we, I don't have a ton of power as a Democrat, but I really care about building those relationships and trying to solve these problems, because it's not good for you with these huge swings back and forth in the long term.
I mean, there's a lot of proposed rules out there. I'm just going to mention some of them here. I have to actually look down because there's this many that are still, I guess, on the vine, right? You have capital requirements, Basel III, right? A lot.
I have a feeling that's not going to continue.
Okay, so this is great. Let me do this, and then you tell me what your thoughts are. Okay, Basel III,
yeah.
Capital requirements. No. Okay. How about?
It doesn't seem like Republicans like that, but
1033 open banking.
well, that's one that I hope does continue. I think that you all are going to be a very important voice on things that are helpful to provide clarity. I think that that's one that I did not hear. It's not like others.
I haven't heard it as well either. I haven't heard a lot of opposition to that. Not yet, anyway.
Yeah.
But I've heard a lot of opposition about brokered deposits. That one is, I've yet to meet a client that is happy about that one. What do you think about the brokered deposit rule? Really undoing the 2021 final rule.
Well, I know that you all will be, I think you're talking to French Hill later, right? So he'll have more insight. He's been on this committee for a long time, and I know his name has been in the mix on who's going to actually be chair. So this is going to play a big role in the direction on financial services. And I'm impressed with the members that they're looking at that really do try to work across the aisle too. I think that he'll have some insight here. I know that I guess I would appreciate a more pragmatic approach to some of these changes instead of coming in with a bulldozer. So although some of you probably want some of them to be taken out with a bulldozer. But I think you'll have a lot of insight from French Hill as well.
What about the custody account, the FBO account rules on reporting and annual certifications? I have not heard a lot of discontent on that one. Maybe the annual certification is an issue. What do you think about that? Obviously, that affects banking as a service. I think many people feel that it was long overdue that banks maintain records in FBO accounts, especially if they have pass-through insurance. But what do you think about that one?
I think that, as you all are looking to next year, is identifying those things that are actually do help your business, bringing clarity, the things that are helpful that the agencies should be a part of setting that roadmap for you all, but then your feedback on the things that are not working well. So I think that this is one you're going to have a much better response on which pieces should continue and which ones that we should be looking at getting away. And on the financial services side, I know that the chair and people across the aisle on both sides are going to be wanting to hear from you and advocating. And so that's why you all being here in DC and meeting with folks, talking about these things, it's really important. And I recognize that you might not have felt like your voice was being heard as much as it should have been, but this is, to have a thriving economy, it takes a functioning government and being responsive to the feedback that we get. And so I think that we could do a lot better of that on both sides.
There's more. I'm not going to go through all of them, but there's at least 3 more. Earned wage access, overdraft lending. I mean, there's a lot on there. But let me touch upon the ones that actually have been passed, right? We've had a couple passed, including credit card late fees, has, I think, had a fair amount of opposition, as well as the reading discrimination into UDAP, right, to capture those loans or those services that are not subject to Regulation B. Congress has the Congressional Review Act, right, an opportunity or an ability to invalidate final rules. I think it's 60 days prior to it. Do you anticipate that Congress, the new Congress, right, we're saying new direction, will use the CRA to invalidate some of these rules that have been passed or maybe passed between now and January 20th?
Yeah, this is a tool that can be utilized. I think that it's a pretty blunt tool, but once again, with a slim majority in the House, some of these things are still going to be more complicated and nuanced. But it is possible that some of these will be revisited in that way. Once again, I think not taking a bulldozer and trying to build upon things that are working and working together to identify the things that we need to change is much more productive.
Okay, so you're for bipartisanship. I love it, right? Turning away from rules for a moment, I think there's an area, again, having been, and I'm ex-Cross River, about like 15, 20 people here who are ex-Cross River as well as a partner. By the way, I didn't even introduce myself. I'm Juan Azel, by the way. The important thing is Brittany, right? So I'm a partner and a co-chair of the Fintech banking and payments practice at Westin. I have a lot of clients concerned about supervision and enforcement, right? I think clients understand that the products and services carry risks where we need heightened supervision. But I think what there's been a lot of concern about is, and I hear this a lot, it's almost become a meme, if you will, not like the Department of Doge, but not quite that meme, but regulation by enforcement, right? And when you look at Trump's first term, following Obama's last term, the enforcement actions, particularly the public enforcement actions, dropped pretty significantly. I think there were, I have these numbers here, 61 public enforcement actions in Obama's last term compared to 114 during Trump's first term. So it wasn't eliminated altogether, but it dropped significantly, right? And then earlier this year, we saw a significant amount of enforcement actions, particularly on third-party risk management and banking as a service against fintech companies, really disproportionate to other areas. So your thoughts on this? I mean, and again, the expectation, the new direction, is that there's going to be a lighter touch on enforcement, particularly consent orders and public enforcement actions. What are your thoughts on this? Do you think that this is a reasonable expectation?
Well, I think that there's a lot that we just don't know. Like I said, with the appointments so far, when you think about the people who are going to be in charge of these critical agencies and some of the lack of experience, I hope that is not where we're going to continue to go in the financial sector side of things, but it's that not having that expertise, not having that clarity. I don't know specifically on what they're going to look like with enforcement, but I think that there's a lot of unknowns. We don't know a lot of what to expect depending on who's there, what experience they're going to bring. And so, I think that there's room to be, I understand, hopeful on some of these pieces that you all want to see change, but just to caution how critical it is that we work together in a bipartisan way because of the instability that we've seen in the past, what we need to mitigate against in the future. And something that is really frustrating, we're once again, this impacts all of you, even though it's bigger, it's not your specific industry, but we're facing whether or not we're going to fund the government again. and things like that, the dysfunction and chaos. We are about to, the anticipation is that they're going to provide a continuing resolution to fund the government, through March or something. But once again, you have, it impacts our entire economy at large when we don't have a stable functioning government. And if you're looking at March, again, when they're threatening to go off a cliff, and it would send our economy into a tailspin. And so I think that while this is much more broader and doesn't impact your specific industry directly, all of these things are interrelated. So I think that there's areas where I understand being hopeful and you want some change, but also, want to caution everybody on what we need to work for more broadly to bring sustainability or predictability here in the United States.
Excellent. So temper our expectations a little bit, but I think we're all looking for more collaboration with particularly the banking examiners and the regulators between the banks on how to proceed, particularly when you're dealing with such innovative products and services, and a lot of times there's just simply not industry best practices in how to deal with this. That's one of the things that I've learned quite a lot. But anyway, I think we are at time. Thank you very much. Congresswoman Peterson, it is a pleasure to share the stage with you, and we hope we come back another time, right?
Yeah.
Next year, Phil, right?
Thank you for inviting me. Great to be with you all. Look forward to working with you.